Hello students, this video is all about question paper review of paper 2 corporate and other laws Jan 25 attempt. So first I will discuss with you multiple choice questions. So without reviewing case scenario, I will go with multiple choice questions. If needed, I will review case scenario. Clear? So first one, with reference to board identified select group of 50 persons and issued private placement offer and applications duly following the required procedure under corporate laws. So this is all about private placement. With respect to private placement, advertisement and renunciation both are strictly prohibited. Now based on this, we need to select correct answer. Public at large is to be informed about such an issue through release of public advertisement, wrong option. Release of public advertisement in any local newspaper and one national newspaper informing private placement is sufficient, wrong option. No company issuing securities under private placement shall release any public advertisements or utilize any media marketing or distribution channels or agents to inform the public at large about such issue. Option C is correct answer. As I told you, under private placement, advertisements and renunciation strictly prohibited. Next one, informing the public at large through advertisement or otherwise is optional. Board of directors by passing board resolution may decide the matter. This is also wrong option. Second one, board of directors of NCL wants to understand from Nirath the implications of 5% holding of BCPL. So for this, just look at this case scenario, just look at this paragraph. BCPL has been holding 5% equity in NCL since February 2018. During the month of February 2022, NCL invested in 70% equity shares of BCPL. That means NCL is a holding company and BCPL is a subsidiary company. And BCPL, before becoming subsidiary, it held a 5% of capital of NCL. Now, subsidiary of a company after becoming subsidiary, should it transfer the holdings in holding company or not required? That is all about the question. And the correct answer is BCPL may continue to hold 5% equity holding in NCL. Getting my point, students? See, because BCPL is not holding this 5% after becoming subsidiary, it is holding 5% equity holding in NCL before becoming subsidiary. So option D is correct answer. Next one. Yogesh, one of the shareholders, deposits in advance the remaining amount due on the shares without any calls made by NCL. NCL declared dividend during the year. So this question is all about dividends on calls in advance. Is member entitled to receive dividends on calls in advance? And the answer is no. Yogesh is not entitled to any dividend in respect of call money paid in advance. Next one, case scenario 2. First, I will go through multiple choice questions. Considering the provisions of FEMA 1999, the possible suggestion that can be given by legal team regarding investment of USD 260,000 USD by Mr. Tony in the Rishikesh farmhouse project. So the point is, who is Mr. Tony is important. Let's see in the scenario. First of all, if you read this scenario, Mr. Tony, a man of Indian origin, having migrated to USA in 1977, and he's much influenced by the above advertisement and has contacted the company with an offer to invest USD $260,000 in the same, with the condition that 50% of payment shall be made by him immediately and the rest will be paid. Okay. So after reading this paragraph, it is very clear that he is not a person resident in India. He already migrated to USA in 1977, so he is not a person resident in India. He is a person resident outside India. Person resident outside India are strictly prohibited from making 5 capital account transactions. 5 capital account transactions are strictly prohibited, like Nidhi companies, chit fund companies, agriculture, plantation activities. So considering those options, considering those provisions, the correct option is Tony cannot invest USD 260,000 towards the farmhouse as being a non-resident. Option C is the correct answer. Next one, fifth one. Considering the provisions of FEMA 1999, decide upon the maximum amount of commission that can be paid to Mr. Cooper. Maximum amount of commission is 5% of foreign currency inflows or 25,000 USD, whichever is higher. So let us look at the case scenario for answering this question. So if you look at the case scenario, so the point is, Access High Builders Limited is Dehradun based public limited construction company engaged in business of developing high-end flats and villas across prime locations in Uttarakhand, India. The company has procured land in the hills of Missouri in the year 2019. Since then, it has been engaged in the development of above site, thereby building a set of 12 villas and 75 flats. Okay, builders have also tied up with one of US-based commission agent, Mr. Cooper, who would be promoting the above property amongst non-residents who would like to own their private accommodation in the above location. Mr. Cooper has successfully sealed a deal with a non-resident for the purchase of one of the villas costing 6 lakh USD, which is to be paid as a suitable commission on the remitted amount. So here the cost of the project, cost of this flat is 6 lakh USD into 5%, that is 30,000 USD, or statutory limit 25,000, whichever is higher means 30,000. 30,000 is the correct option. Next, the last year landslides and other geographical disruptions in the region during monsoon season has compelled the builders to obtain expert consultancy services, shaping and curving of the land in and around construed site, including designing of the roads, power facilities, and other infrastructural backup. So here consultancy services is with respect to infra projects. It's not other projects, infra projects. Consultancy services with respect to infra projects up to 10 million USD. RBI permission is not required. So now if you look at the options, considering the provisions of FEMA, maximum amount of commission that can be paid to Mr. Cooper as well as consultancy charges to Accurate Consultants Limited, for which RBI approval would not be required. Without RBI approval, up to 30,000 USD commission is allowed and up to 10 million consultancy charges is allowed. So correct option is option A. Considering the provisions of FEMA 1999, decide upon the process of releasing the containers from Italian ports by Indian company. With respect to detention charges, payment of detention charges exceeding the rates prescribed by the authority, for which central government prior approval is compulsory. Central government prior approval is compulsory. So accordingly, if you look at the options, AHBL shall have to obtain prior permission of Ministry of Surface Transport for payment of detention charges as it exceeds the rates prescribed by Director General of Shipping. This is correct option. Why not option B? In option B, you will see Ministry of Finance. Ministry of Finance permission is not required for payment of detention charges exceeding the rates prescribed by DGS, Director General of Shipping. So option B is incorrect. AHBL shall have to obtain prior permission of Ministry of Finance. No, AHBL need not obtain permission. This is also wrong option. So option A is correct option. Only when you remember permitted current account transactions and from whom we need to take permission, you can answer this question. Seventh one, where after a partner's death, the business is continued in the same limited liability partnership name, the continued use of name of the or deceased partner's name as a part thereof. Already partner got deceased, but name is still in usage. In that case, will it make legal representatives liable or not liable? Very simple answer. It will not make a legal representatives liable. It shall not by itself make his legal representative or his estate liable for any act of limited liability partnership done after his death. Question 8, very simple question. General Clauses Act 1897 is applicable to, so here General Clauses Act applicability doesn't depends on its own. It depends on the applicability of all other central acts. Therefore, Act does not define any territorial extent clause. The applicability of General Clauses Act depends on applicability of central acts. Okay, C option is the correct one. Case scenario 3. JK Logistics Limited is one of the leading companies in logistics industry. 5 years ago, 75% of equity of JK Logistics Limited were acquired by RK Logistics. So RK is holding company and JK Limited is a subsidiary company. Okay. RK Logistics has a presence in Haryana, Punjab, Rajasthan and is mainly into the transporting of agriculture produce. As timely transportation of agriculture produce is of strategical importance, the state governments of the above 3 states hold a stake in RK Logistics Limited. State government current stake are as follows. In RK Limited, 3 state governments are holding. Haryana is holding 19%. Rajasthan is holding 20%. Punjab is holding 18%. So what is the total of this 39 plus 18. So 57%. 57% of RK Limited was held by 3 state governments. Therefore, RK Limited is a government company. As you all know, subsidiary to a government company is also a government company. That means both JK Limited as well as RK Limited are government companies. Is it clear? Next, on 29 September 2023, just after conclusion of AGM, Mr. Rohan, the auditor of JK Logistics Limited, suffered a heart stroke, and in order to reduce workload, resigned as auditor of the company. But unfortunately, he forgot to inform the concerned authorities about his resignation. Auditor of a government company, if he is resigning, he has to communicate with company, ROC as well as C&AG, or else he will get a punishment. Understood? So he forgot to inform with the concerned authorities about his resignation. It is important to note that auditor annual remuneration was 5 lakhs. The punishment would be audit remuneration or 50,000, whichever is less. So that is the punishment. Just remember. Company, on the other hand, appointed AG and associates as their auditors after completing all statutory formalities. Mr. Avinash, who is one of the partners of audit firm, had borrowed a sum of 3.5 lakh from RK Logistics Limited and has dues of 1.49 lakh towards use of logistics services of the company. Even if you combine it, no need to combine, but even if you combine it, it will be 4.99 lakh. But we had a limit of up to 5 lakhs, right? Up to 5 lakhs, no disqualification. Exceeding 5 lakhs, disqualification. Even after consolidating the two amounts, the amount is within the limit only. So no disqualification at all. Based on the facts given in the above case scenario and by applying the relevant provisions of Companies Act 2013 rules therein, choose the correct answer of the following questions. With respect to the act carried out by Mr. Avinash, the partner of new audit firm, what can infer about the appointment of AG and associates as auditors of the company? Yes, it is valid since indebtedness is within the prescribed limit. Direct indebtedness limit is 5 lakhs. So valid appointment. To whom should have Mr. Rohan informed about his resignation? He should have informed company, ROC and C&AG, since it's a government company, right? Since it's a government company, he has to inform 3 parties. But the point is, penalty 5 lakhs, this is wrong option. Penalty not exceeding 50,000. So option D is correct answer. So option C, option D, the difference is, it is all about punishment. Communication with the 3 parties is okay. Registrar, C&AG, company is okay. But punishment is different. So option D is correct answer. 11th one, based on shareholding pattern of JK Logistics Limited and RK Logistics Limited, select the correct answer as to the classification of companies. Both the companies are government companies. Next, case scenario 4. Very, very tricky question, very tricky question. I just gone through the case scenario. As per my knowledge, 3 dates. 5th September AGM was called, but lack of quorum, AGM got adjourned to 12th September. At 12th September, financial statements were presented. Financial statements were placed for adoption, but they were not adopted. And on 2nd December, financial statements were finally adopted. So based on these 3 dates, we got 4 questions. Let's see each and every one question. Notice for conducting AGM of XYZ Limited was sent on 3rd August to all stakeholders who are eligible to receive notice. The said notice specified that AGM will be held on 5th September 24, but due to want of quorum, said AGM was adjourned to 12th September. In the said meeting held on 12th September, the financial statements of company could not be adopted due to some unavoidable circumstances. Since financial statements of company could not be adopted in the above meeting, the directors did not file financial statements relating to the financial year 23-24 with ROC on the plea that financial statements of company were not adopted in general meeting, and therefore there is no necessity to file financial statements with ROC. Okay, on 2nd December 24, AGM was conducted in which financial statements of the company were adopted. Actually, this is a false case study, because until and unless financial statements were adopted, AGM is not said to be concluded. So there is a mistake in the case study. Okay. Next one, since the company secretary was on a business tour and was absent from India from 20th December to 2nd January, the adopted financial statements were filed with registrar only on 3rd January 25. Based on the facts, answer the following questions. See, there is a mistake in the case study, but that will not affect our answers. That will not affect other questions. Okay. What is the course of action that XYZ Limited should take for filing of financial statements with the registrar with respect to AGM held on 2nd December 2024? So with respect to 2nd December 2024, he has to file financial statements within 30 days of adoption. Okay, so let me read the option. XYZ Limited is not required to inform the registrar the fact that financial statements were not adopted in the adjourned AGM held on 12th September 2024, but the adopted financial statements will be required to be filed with the registrar within a period of 30 days from 2nd December 2024, which will be treated as financial statements for the year 23-24, and previously filed unadopted financial statements, if any, will be treated as provisional financial statements. This is the correct option because it is satisfying all the provisions. It is satisfying all the applicable provisions. Next one. So here, if option D, if you look at option D, if no financial statements were filed earlier. So looking at this point, D is not a correct answer. Previously filed unadopted financial statements, if any, will be considered as if no financial statements were filed earlier. This is not a correct one. Previously filed financial statements, unadopted financial statements will be considered as provisional financial statements. So that's why D is not a correct option. Next, 13th question. In the above scenario, in case XYZ Limited could not convene AGM till 2nd December 24 and the meeting held on that date was AGM, what will be the obligation of company with regard to filing of financial statements with registrar before conducting the said meeting? So here the correct option is option D. Even AGM was not held, XYZ Limited was required to file financial statements along with statement of facts and reasons. If you look at option C and option D, this is the only difference. Statement of facts and reasons for not holding AGM should have been filed with registrar within 30 days of last date before which AGM should have been held. So what is the due date of AGM? From the due date of AGM, yes, within 30 days, financial statement shall be filed. Along with that, they need to mention statement of facts and reasons why AGM was not conducted. Option D is correct answer. Option C, statement of facts is missing. That's why option C is not correct answer. Clear? Next, 14th one. What is the course of action that XYZ Limited should take for filing of financial statements with registrar with respect to AGM, which could not be held on 5th September 2024? So here the correct option is generally there is a conflict between C and D. But if you look at the provision, if financial statements were placed and if they were not adopted, file them as unadopted financial statements, which ROC considered them as provisional financial statements. Later, when adoption happened in the adjourned meeting, file the adopted financial statements as a final financial statements with ROC. So here, first time AGM was adjourned due to lack of quorum. First time AGM was adjourned due to lack of quorum. It's not lack of unadoption of financial statements. So best possibility, if you read at these options, there is no obligation on the part of company to inform the fact to the registrar that AGM could not be held for want of quorum, but unadopted financial statements will be required to be filed with registrar with a period of 30 days from 5th September 24. Option D, if you read option D, there is no obligation on the part of XYZ Limited to inform the registrar the fact that AGM could not be held for the want of quorum. Also, unadopted financial statements will not be required to be filed with the registrar in this situation. To the best of my knowledge, option D is correct answer. The only reason is, first of all, AGM was not at all conducted. Due to lack of quorum, AGM stands adjourned. Since AGM was not at all conducted, so question of unadopted financial statements to be filed within 30 days from 5th September 2024 will not arise. So this is my pure opinion. Next, 15th one. What is the course of action that XYZ Limited should take for filing of financial statements with registrar with respect to adjourned AGM held on 12th September 2024? XYZ Limited should inform registrar the fact that AGM was held on 12th September, and since financial statements were not adopted, financial statements will not require to be filed. No. Unadopted financial statement should be filed. See, there is no obligation on the part of XYZ Limited to inform the registrar the fact that AGM was held on 12th September 24, but unadopted financial statements will be required to be filed within registrar within a period of 30 days from 12th September 24, which will be considered by ROC as provisional financial statements. So this is the relevant option. Why not option D? Let's see. There is no obligation on the part of XYZ Limited to inform a registrar that AGM was held on 12th September 24, but unadopted financial statements will require to be filed within the ROC within a period of 30 days from 12th September 24, which will be considered by registrar as financial statements. This is incorrect. The difference is, only one difference is there. The difference is the word provisional is missing when compared to option D. So that's why option D is wrong answer and option C is correct answer. Clear? Everyone? So this is all about MCQ's review. Coming to the descriptive part, 1 lakh equity shares of 100 each were issued at a premium of 2 per share by PQR Limited after offer for same was received from the shareholders in terms of prospectus issued by company on 1st April 2022. The prospectus specified that amount received from issue will be exclusively used for manufacturing and distributing some life-saving drugs. In August 24, company after proper market survey found that the ample demand for artificial intelligence based software and therefore decided to go forward for development of such type of software. They also wanted to divert a small amount for investment in equity shares of a large successful company. So since there was a surplus money from the above issue of equity shares, the board of directors passed two resolutions for above purpose. First, for investing 60 lakhs for development of artificial intelligence. Second, for investing 5 lakhs in the equity shares of a listed company. See, this is all about section 27, variation of objects of the prospectus. So variation is permitted only with special resolution, and that shall be passed through postal ballot. Second one, you cannot use the funds for making investment in listed company securities. Listed company securities not possible. So 5 lakhs in equity shares of X Limited is prohibited. It's illegal. In order to avoid an unwarranted situation from the shareholders, the directors called for an EGM in which votes cast in favor of proposal was in excess of the votes cast against it. Some shareholders objected to the above action of the board on the following grounds. So that the resolution passed in EGM was not proper since required majority did not approve the same. Here we got just ordinary resolution. Votes in favor of proposal was in excess of votes against it. It is nothing but ordinary resolution, but we need special resolution. So first objection of shareholders is valid. Objection of shareholder is valid. Second objection, prescribed details of the notice which was given to the shareholders should also be published in newspapers, one in English and one in vernacular language, circulating in the city where register office of the company is situated, indicating clearly justification for such variation in the use of the funds. Yes, this objection is also valid. This objection is also valid. Yes, you need to get special resolution, but prior to that, advertisement in 2 newspapers is compulsory. Next, that the resolution passed for investing 5 lakhs in the equity shares of X Limited is illegal. This objection is also correct. All the 3 objections made by the members are correct. Next one. So, question 1 is all about section 27. Next one, Sohan Limited was appointed as statutory auditor of RST Limited, a non-government company at AGM held on 30th September 23. He has resigned after 2 months as he wanted to discontinue the practice and surrendered his certificate of practice and joined a multinational company. Explain how new auditor will be appointed by RST Limited and the conditions to be complied with this in this regard. This is all about filling of casual vacancy. And since company is a non-government company, board of directors will fill in case of casual vacancy. And coming to here, this casual vacancy arises due to resignation. Casual vacancy due to resignation. So board resolution alone is not sufficient. Within 3 months, members ratification is also required. So members approval, members ordinary resolution is also required. Getting my point, students? So this is the answer for B. Next one, Murari Lal, a person resident outside India, has invested in 4 residential house immobile properties under construction in Kolkata. Each property is negotiated at 2 crores with the companies owned by builders. This amount is to be paid in 2 installments, 60% on immediate basis on booking and balance on possession of the properties. Okay, the above transaction is done by the companies owned by the builders through 2 brokers from USA on commission basis. Mr. Murari Lal, as per the terms and conditions, remitted 60% of the amount of all 4 immovable properties directly to the company. Answer the following explaining the provisions of FEMA. So this is all about FEMA question. First of all, as per FEMA, Murari Lal is a person resident outside India. Okay. Has invested in 4 residential immobile properties under construction in Kolkata. Okay. So now whether investment by Murari Lal and payment of commission on this transaction permissible? How much maximum amount of commission can be paid to each broker without RBI approval? So now the point is whether it is a prohibited capital account transaction or permitted capital account transaction. The answer is permitted capital account transaction. So investment is allowed. Investment is allowed. It's not covered in chit funds. It's not covered in Nidhi. It's not covered in real estate business. It's not covered in farm housing. It's not covered in transfer of development rights, TDRs. So therefore permitted. First thing. Second thing, maximum commission that can be paid with respect to real estate, with respect to sale of flats. The answer is 25,000 USD or 5% of consideration. 5% of consideration, whichever is higher. So up to this limit, permission from RBI is not required. Next one, Silk Segment Private Limited is a wholly owned subsidiary of a Silk Block Limited, which is a listed public limited company. The board of directors of Silk Segment Private Limited have collectively decided upon proposal to grant loans of 15 lakhs, 20 lakhs to Mr. Sohan and Subarna respectively for the purchase of fully paid up shares in Silk Segment Private Limited. So here 2 companies are there, Silk Segment Private Limited, which is a wholly owned subsidiary of Silk Block Limited. And this question is talking about section 67, restrictions on purchase of its own shares. Restrictions on purchase of its own shares. Okay. So the point is, to employees, some limits, up to some limit, that is up to annual salary. I'm sorry, up to 6 months salary. And that too for acquiring of fully paid up shares. Fully paid up shares. An employee should not be covered in employees not be KMP. If the 6 conditions are satisfied, then it will fall under section 67 exception. Getting it? And one more point you need to remember is SSPL is a wholly owned subsidiary of SBL. That means, private limited company, which is a subsidiary of public limited company. It is deemed to be public company. Deemed public company. Once again, I'm telling you, this is deemed public company. 67 shall apply. First thing. Next one, what is the loan amounts they granted to their employees? 15 lakhs to Sohan, 20 lakhs to Subarna. Okay. Mr. Sohan is a deputy marketing manager of Silk Segment Private Limited with a monthly salary of 1 lakh. 1 lakh into 6 months means 6 lakhs. But how much finance they did? How much finance they did for Sohan? 15 lakhs. Violation. Whereas Mr. Subarna, a qualified chartered accountant, is a CFO. Comes under directly KMP, right? So whether the proposed loans to Sohan as well as Subarna can be disbursed by company keeping in view of a Silk Segment is a private limited company? No, it's not a private limited company. Whether the answer would be different in case 25% of shares of SSPL was held by SBL. Now answer is different. Answer is different. Why? It's not a subsidiary to public company. Therefore, it is not a deemed public company. So exception, for private companies, benefit is there. For private companies, benefit is there. But coming to here, the point is they made a violation. They made a violation. Very simple. Next one, B. The following are the extracts from the financial statements of BUI Private Limited, which is neither a startup nor an associate subsidiary of another company. So this is also about acceptance of deposits, where limit of accepting deposits is not applicable. So limit of accepting deposits not applicable to startup private limited companies and a company which is neither associate nor subsidiary to another company, plus its borrowings is twice of its paid up share capital or 50 crores, whichever is less. This condition also to be satisfied. And the company has not committed any default with respect to repayment of aforesaid borrowings. Clear? So 3 conditions to be satisfied for non-applicability of certain provisions regarding acceptance of deposits. For example, limit of accepting deposits. So what are those 3 conditions? Neither associate nor subsidiary. Borrowing shall not exceed twice of its paid up share capital or 50 crores, whichever is less. And last one is no, what is the point? No default with respect to repayment of aforesaid borrowings. So now based on this, let's solve. So paid up share capital here it is 8 crores. 8 crores into 2 times means 16 crores. Whereas all loans, if you observe, term loan from LMR Bank Limited is 12 crores. And the next one is cash credit loan for working capital 5 crores. So in the entire section, there is no distinction between long-term loans and short-term loans. So if you observe carefully, 12 plus 5 17, which is exceeding 16 crores limit. So twice of its paid up share capital or 50 crores, whichever is less, 2 times of the 8 crores means 16 crores. 16 or 50, whichever is less means we have to take 16 crores. But total loans, if you observe carefully, it is 17. Therefore, it will not fall within the limits. It will not fall under exemptions. Okay. And company has already successfully repaid all the monies which were accepted earlier in the form of deposits. That means company has not committed any default with respect to old deposits. Okay. Now the point is the condition was same will be provided if company accepts them in the form of deposits, and the applicable provisions of Companies Act 2013 rules may be thereunder. Okay, private limited company not in support of depositing any amount in a DRR, deposit repayment reserve account, for the purpose of repayment of the said deposits, since repayment was to be made out of amount received from the customers which are going to book the flats. Okay, so they are not interested to accept they are not interested to create a DRR, deposit repayment reserve. They are not interested. Okay. Now, such private companies can accept deposits up to 100% of, private companies actually the limit is 100% of paid up share capital plus free reserves plus securities premium. So, if you observe 8 plus 2 plus 5, that means 15 crores, up to 15 crores, yes, DRR condition will not apply. So, acceptance of 14 crores, DRR condition not required. Acceptance of 20 crores, it is exceeding the limits. It is exceeding the limits. So therefore all the conditions are applicable. Getting my point, students? Everyone. So this is all about, benefits, certificate of no default from company auditor. Next one, issue of circular. Next one, Next one, filing of circular with ROC. Next one, creation of DRR. All these are exempted for companies which are accepting deposits within the limits, which is a startup company, which is a neither an associate nor subsidiary, and whose borrowings not exceeds twice of its paid up share capital or 50 crores, whichever is less, and company has not committed any default with respect to aforesaid borrowings. If company is covered in this list, then these conditions are not applicable. So as per that limit, 100% of 8 crores plus 2 crores plus 5 crores will be 15 crores. So up to 15 crores, DRR creation is not required. Understood? Next one. So these are the direct questions, document. State what you understand by the term document. Yes, discuss which of the following will be treated as documents. Direct question. Yes, check is an instrument. It is a document. Power of attorney, it is an instrument. It is also a document. Every instrument is a document, but every document need not be an instrument. Do you remember? Next one. Next question, UINA Infra Projects was incorporated on 1st June 2022. Mr. X has already registered the trademark of UINA Infra Projects on 1st April 2018 under Trademarks Act 1999. So let us look at the options. First, let us look at the option. Therefore, not proper following grounds. That the name of company is not too identical with the or too nearly resembles to the name of another company. This is a wrong option. And B, the stipulated time period of 2 years of making a complaint. This is also wrong. See, I know the question. That's why I told you the answer. But let us read the question. Mr. X was suffering from a prolonged disease since 1st April 2021. Trademark registration happened in the year 2018. Okay. Next one, private limited company was incorporated on 1st June 2022. Okay. When X recovered from illness on 20th May 2024, joined his office 5th July 24. He came to know from his staff members that a company has been incorporated with the name UINA Infra Projects Limited. He lodged a complaint with Regional Director on 10th July 2024, requesting him to order the company to change its name. Regional Director examined the application of X and on 11th July issued a direction to company to change its name, and director contended that above direction of regional director was bad. Why? He raised two objections. One is his name is not similar to the name of existing company. This is a wrong intention, because name shall not be identical to, name shall not be resemble with the existing trademark. First thing. Second thing, name shall not be identical to or resemble with the name of existing company. So trademark point is there. So contention of director, first one is wrong. Next one, stipulated time period is not 2 years. It's a 3 years. Within 3 years, he can file an application with a central government. That means regional director for rectifying the name of the company. And 3 years commencement time will be 1st June 2022. Commencement time of 3 years will start from 1st June 2022. Members of World One Limited holding more than 2% of total voting power wants the company to give a special notice to move a resolution for appointment of an auditor other than retiring auditor. He explained whether members can do so. Yes, 1% of the voting power, total voting power, or 5 lakhs rupees 5 lakhs paid up share capital. Any condition to be satisfied? Yes. If a member of a listed company who has casted his vote through electronic voting can attend GM? Yes. And can change his vote subsequently? No. First one yes, second one is no. Latin term absolutia sententia expositor non-indigent, and how would same help in correctly interpreting a definition given in a legislation of statute? Primary rules of interpretation, primary rules, rule of literal interpretation. Just write it. Next, fourth one, we need to consider whether it is a foreign company or not. Place of incorporation, all companies incorporation outside India, registered outside India. Additional information, developed patient database for a hospital in Mumbai. Business operations in India, foreign company. No place of business in India, but employs agents in India. Agent is their right, sufficient. Board meeting held in just having board meeting alone is not sufficient to constitute whether it is a foreign company or not. So it is not a foreign company. Not a foreign company. Next one, 49% of shares held by an Indian company. If it is 50% of the shares, then it would be a deemed Indian company. Since it's a 49%, so this is simply a company incorporated outside India. It is a company incorporated outside India. It's not a foreign company. Getting it? The last two cases, it is a company incorporated outside India. First two cases, foreign company. Clear? Next one. NS and Associates LLP was formed in the year 2020 and it was engaged in the business of manufacturing of plastic parts for automobiles. It constituted Mr. Naveen and Mr. Suresh as designated partners who were responsible for obtaining contracts from various automobile manufacturers across the country for supply of spare parts for vehicles. In the year 2021, an investigation was ordered by tribunal against LLP in connection with financial fraud with 50 lakhs 25,000. Mr. J, one of the accounts manager and employee of LLP, was accused by complaint as one of the perpetrators to the fraud. Okay. Next one, tribunal levied a penalty of 1,25,000 to be paid by J. Okay, Mr. J approached a tribunal and provided vital information about the other black sheep involved in the fraud. This is nothing but whistleblowing. This is all about whistleblowing. So decide whether tribunal can waive off or reduce penalty imposed by it on Mr. J. Yes, the whistleblower will get certain benefits like waiver of the penalty, reduction of the penalty. Okay. Can LLP suspend Mr. J from service of commission of the act for revealing the name of accused involved in the fraud? No. LLP is prohibited from punishing whistleblower. What do you mean by rule of egisdem generis? State any three situations where rule of egisdem generis is not applied. First you need to explain egisdem generis, and you need to specify the exceptions where egisdem generis will not be applied. Understood? If the list is exhaustive, or if the items contained in the list are diversified in nature, these are the points you need to write. It is all about exceptions. Next, fifth question, what is the meaning of impact assessment? In CSR, impact assessment is required. Not for all projects, but the projects which are within the projects which cross the threshold limit. So now impact assessment, I told you, is not applicable to all the projects, but where expenditure, CSR expenditure 10 crores obligation is there, then CSR impact assessment is required. So meaning of impact assessment, it's all about it's all about checking whether ultimate public is benefited or not. Whether public whether the ultimate objective of project is met or not. Whether impact assessment is required by all the companies? No. Where CSR expenditure exceeds prescribed limit, for them only. Who can conduct impact assessment? Independent person, not by an employee. Independent professional outsider. State the circumstances under which winding up of LLP may be ordered by tribunal. Direct question. Define the term person as per General Clauses Act. So write the definition of the person and discuss which of the following will be treated as a person. So just idle and admired person, inspired person. Natural person definitely is a person under General Clauses Act 1897. Public body of individuals, yes, a person under General Clauses Act. Company, artificial body, yes, it is also person under General Clauses Act 1897. Next one, Top Spinners Foundation is a company registered under Section 8 of the Companies Act 2013 with a view to promote young and talented people towards becoming of world-class cricketers. The foundation selects young boys and girls from different parts of the country via talent hunt competitions and other references from its members, thereby giving them proper training with residential facilities at designated clubs open for the purpose. Okay. Foundation has been incorporated as a charitable institution in 2016. It's a Section 8 company. Okay. The AGM of a company is usually held at the club registered office of the company at Jaipur. Members in one AGM have strongly suggested next AGM may be held at a hotel in near vicinity of registered office at Jaipur instead of club, as the same is a congested sitting area. And it was also decided by the foundation itself 15 days prior notice of AGM be given with the facility of only physical voting, no e-voting to be provided to the members. Now, with respect to AGM of a Section 8 company, directions with respect to day of meeting, time of meeting, place of meeting can be given by the members in the previous AGM. Getting it? So now board of directors has to follow the directions given by the members in the previous AGM. Next one, Srinivas Iron and Steel is a public sector listed company engaged in the manufacture of high-end steels limited to be supplied to various other entities countrywide. CVB and Associates Chartered Accountants have been appointed as statutory auditors of the company for the term financial year 23-24. Later in a year, a financial fraud has come to the force not reported by the current auditors. Okay, leading to the dissatisfaction. Okay, next AGM is scheduled on 28th September 24. The members comprising of H, J, K having paid up share capital of 1.5 lakh, 1 lakh, 2.5 lakh. That means total how much? 5 lakh. Respectively have decided to send a special notice to the company regarding passing of resolution at next AGM for appointment of auditor other than existing auditor. 5 lakhs condition satisfied. Special notice is valid. But the time limit for sending special notices, whether above members can validly issue? Yes. What is the time limit for issue of special notice? 14 clear days. At least 14 clear days before AGM. Whether company would have to communicate about the above special notice to the other members after receiving the same? Yes. Same shall also be given to the existing auditors. Manish, a shareholder of a company, has not claimed his dividends from the company for the last 10 years due to different reasons. He wants to know whether he will be able to recover the dividends declared by company for all these years. Yes, but he need to file application with IEPF authority. Why? 7 consecutive years. If he fails to claim dividends plus shares shall be transferred to IEPF. So he has to file an application with IEPF authority. And referring to the provisions of FEMA, state the meaning of current account transaction. So just definition of current account transaction, just write it, which is not a capital account transaction, and write those 4 transactions which were particularly specified as current account transactions. Clear? But one more point I need to discuss with you in the above question. That above question is, if you look at this question, number of members already exceeded 1000. Number of members already exceeded 1000. So e-voting is mandatory. So members, by giving a direction, they cannot convert, e-voting to physical voting. E-voting is mandatory. Is it clear, everyone? So with this, I conclude the meeting. I conclude this session.